Just a little bit ago, we had the grain export inspections report that was out. Let's take a closer look at these numbers, and then we'll find out what's going on with the futures. Corn came in just a little bit above what last week was. In fact, 658,403 metric ton. Last week was 605,129. Sorghum, though, this is a big jump, I guess a big reduction from last week's big jump. This week, 150,651. Last week, 264,033. Soybeans, a little bit disappointing also, 1.23 million, and last week was 1.80 million. And wheat also a little bit of a disappointment. 316,867 metric ton, as opposed to last week's 410,974. So if you go all the way across the board, except for the corn, a little bit of a disappointment here. So what about the world supply and demand estimate? Well, that'll be out tomorrow, and it'll be released 11 o'clock Central Time. Let's talk right now to Scott Gecas. He is with Long Leaf Trading. They're at the edge of the floor at the CME Group in Chicago. Scott, is there much talk today at the trade about this report?
Well, today's report is still everyone's still focusing on, honestly, everyone's going to be focused on those numbers for tomorrow. The weather's still in a focus across the board, soybeans, corn, as well as the wheat. Still seeing strong demand from China in, all aspects. So, but I mean, right now everyone's just in wait and see mode, wait and see what those numbers are going to be tomorrow.
All right, as we turn the calendar into 2018, which is just around the corner, hard to believe it's already here. One of the keys is going to be these exports continuing to remain strong and also catch up and meet and maybe even exceed some of USDA's expectations for this year.
Yeah, that's going to be an interesting with the USDA expectations. In the past, they've been underestimating those expectations for the last few, times. So it's really going to be important to see what comes in here at the end of the year.
Are there many traders that think that this year's expectations for all of the exports are just a little bit of blue sky, or do they think that they can actually be met?
Well, it just depends on which market you're looking at. Soybeans across the board, you're seeing the traders are a net long position. Corn, they're pretty much net short. Wheat, they're definitely net short, even at contract lows.
Well, that doesn't help matters either when we have so much surplus globally in.
Yeah, exactly. So everyone's waiting, seeing what those numbers are going to come out tomorrow. So all right, see what happens.
Grain market a little bit weaker here today, and so what is all of this attributed to? Just that report positioning?
Yeah, just report positioning. There's still a lot of focus on the weather and stuff like that. So, again, some of the fundamentals are there intact, but as soon as that report comes out, all the fundamentals go out the window anyway. So
okay, all right. Scott Gecas here with us, and Scott, we're going to talk about the livestock market here in a moment, but we need to get everybody up to date on the futures where they stand right now. Corn market's been lower all morning long. Right now, December corn down 3.5, 336.5. March corn down 4 1/4 at 348.5. If we check out the soybean market right now, January down 7.5 at 982 1/4. March beans down 7.5 at 994. May soybeans down 7 1/4 at 1005. December Chicago wheat down 5.5 at 386.5. July new crop Chicago wheat down 5 3/4 at an even 440 now. And December Kansas City wheat down 2.5 at 398 1/4. December Minneapolis wheat unchanged at 597 3/4. And March cotton down 55 at 73.17. And Scott Gecas and I will be back in just a moment to bring you up to date on the livestock trade straight ahead here on the Market Day Report. Scott Gecas is at the edge of the trading floor in Chicago at the CME Group, and he rejoins us here. Scott, this livestock market also kind of drifting here a little bit. Show lists are out for the live cattle, but the midday cutout report really didn't offer much direction or much help here so far.
Yeah, that midday cutout, it just came pretty much right in line, as expected. Didn't really have too much of a market moving aspect to it. So, the cattle market has been in an oversold territory. Weather's still a concern. The weather is putting a bearish tone on the cattle market as well. So.
And that's just because it's been so warm in much of the feedlot country. Those cattle just are not burning the calories to stay warm as they normally would. Here
exactly.
and just like Scott mentioned here at midday, let's check those beef cutouts. The choice was up 34 cents at 205.93, and the selects were down 14 cents at 185.83. And when we look at the pork cutouts here at this midday, the carcasses up 5 cents at 83.75. The loins up $1.04 at 72.46. Hams came in $2.42 lower at 64.65, and the belly market up 302 at 145.54. Well, Scott, this hog market, we've started to see these weights of these finished hogs just start to slowly, incrementally increase here about over the last, 3 to 4 weeks now. So we're starting to take a lot of that lightweight premium out of the market also.
Right, and that's a concern because usually this time of the year, you're going to see the weights drop. Especially in the cattle market alone, you've seen them jump by 2 full pounds. That's definitely a concern, and I think that's why you're seeing a little bit of pressure on both the markets.
All right. What about the outside markets today, Scott? We've been watching this dollar pretty closely. I want to bring up these numbers and report on this. December dollar index down 100 points at 93.780 right now. March dollar down 140 at 93.380.
Yeah, the dollar, it's a finicky, market. You got to be very careful when you're trading the dollar. There's a lot of fundamental aspects that have, a directional basis with the dollar. So you're seeing a little bit of, a lag over from the tax reform. So we'll see, that's definitely going to play into, which way we're going to start moving.
Oh, we still have a Fed report that's going to be facing us later on this week.
Right. And then the Fed report, we'll see what happens. I think it's everybody in the world is expecting, a 0.25% raise, but, we'll see. I don't think they're going to surprise, but, maybe they'll raise a little bit more and you're going to see a wild action if they do.
All right. Well, there's certainly some wild action there in the background just a few moments ago. This market just looking for any kind of activity. But one of the things that we continually hear from traders, Scott, is the fact that we're starting to get into this very thin volume of holiday trade and just not a lot of activity.
Yeah, right. And then that's just typical, cyclical part of the markets. People are coming into the holidays, kids are home for weeks on end just from Christmas vacation. People are spending a lot of time with their family, not putting a lot of volume in the markets.
All right, Scott Gecas here with us with Longleaf Trading. Crude oil market, let's find out what the latest is there. Crude oil right now on the nearby contract, pulling back from some of its earlier highs. Now 43 cents higher a barrel at 57.79. February crude up 41 at 57.85. Checking on the heating oil market before we go to here. January heating oil up just a fraction off of 2 pennies higher at $1.94 a gallon. And February heating oil up just a little over 2 cents at almost $1.95 a gallon.
All right. Thank you very much for the rundown, John. Appreciate it.